Welcome back to the InvestTalk Classroom, and today we're going to talk about the residential housing market. Now, I always want to start off with the first main point when it comes to buying a home, and that is most people look at buying a home as a way to earn money, make money, build wealth, and there's certainly an aspect to that. But what's most important when it comes to your home is that you love living there, that you love your lifestyle, that you're happy there, because no amount of money is going to make you completely happy. It's about your everyday life. And so what type of amenities does it have? What's the size? Does it fit your family and your needs? And so that is always number one. So many people put what price they pay for it, or how much money they think they're going to make, or what interest rate they're getting, or whatever, in front of those basic needs, the utility of that home. So with that out of the way, Luke, let's talk a bit about the current dynamics within the housing market. We know interest rates are a lot higher, no longer 3% anymore, mortgage rates above 7%. So the big question is, should you buy a house today?
If you really need it and your primary use is to have it as a utility, yes. I think put in a more blunt way to summarize what you just said before is essentially that the story of purchasing a home and having it be an absurd investment over 40 years that your parents or maybe grandparents enjoyed is a lie. Mm-hmm. It is not possible anymore. Valuations are so high. Mm-hmm. The supply is so low. The cost of owning it is so high because of where interest rates are. You're not going to have the same investment experience. So stop thinking of it that way.
Yeah, and at least on a real basis.
On a real basis.
Now, if inflation remains elevated, obviously prices generally are going to go up. Mm-hmm. But if you think of the real return that our parents and grandparents had on their homes that they bought in the 70s and the 80s, you're not going to get that again. Why? Because mortgage rates are not going to go from the high teens to 3%. Again, they're not going to drop 1,500 basis points, right? So, right now we're at 7+ on the mortgage rate, and that could drop back again. That could certainly be a tailwind to prices. But in general, you're not going to get that amazing return from owning a home. So it's about the utility. Now, the current supply dynamics are such that people don't want to list their homes. New marginal supply is coming from those new home builders, and the prices are just simply not going down because of lack of forced selling.
Yeah, so that's something that is antithetical to, I think, what happened in 2008, where people found themselves in positions where they were forced to sell their homes. Mm-hmm. Here, we don't have that. We have the forced holding scenario in which, why would I sell my home? Mm-hmm. If I'm going to have an interest rate that is more than double what I had before, ignoring the fact that 40% of people are locked in their homes in the first place, the supply of houses is artificially low because not just because people aren't building homes, not just because of supply chain issues of the pandemic, but because nobody wants to leave their golden handcuff of a mortgage. Mm-hmm. And so much of the overall housing market is owned by a group of people who are older and have no desire to move.
And institutions.
The boomers. Institutions.
And BlackRock has bought up a lot of homes for rent. And then you have people that are investing in vacation rentals, and that's taking supply off the market as well.
Yeah.
Right. And then it's also about, now we just talked about national level. Mm-hmm. But there are also local dynamics. Every real estate market is local to a degree. Now, some localities are benefiting from broad migration patterns, and that is a big shift, a big secular shift that's happening right now, which is moving out of the big cities because of work from home. You're seeing the weakest housing markets in places like the Bay Area, Seattle, Austin, Texas. Those are the areas that, from the pandemic, they actually benefited a great deal until everyone had to work from home or were able to work from home. Now they're migrating to the Midwest, the South, and those are the areas that are doing the best outside of the major city centers. And so everything is certainly local. So it's hard to paint a broad brush because of these migration patterns that I don't think are reversing anytime soon and are likely to continue to intensify.
Yeah, and I think people too often don't realize that purchasing a home comes with a lot of opportunity costs. I think people think to themselves at the end of the day, if I'm going to rent a home, I'm going to own nothing when I move out. Mm-hmm. If I'm going to purchase a home, I'm going to have an asset at the end of the line. But there's more to it than that. Mm-hmm. Think about buying a boat. Everybody says never buy a boat.
Never buy a boat.
Why never buy a boat?
Worst financial.
Because it's a money pit.
Yeah.
Because it's always breaking and something's always going wrong. Mm-hmm. I live in an apartment. Mm-hmm. If something goes wrong in my apartment, my landlord pays for it. Yeah. My landlord fixes it. They do it pretty quickly because if not, nobody would live in those apartments anymore. Mm-hmm. You own a home. What happens if your air conditioning breaks?
I have to fix it.
What happens if your plumbing
we just
breaks?
put in air conditioning. So
if that breaks, you're probably going to sue the company.
Yeah.
But other than that, what happens if your plumbing breaks?
Yeah, we have to handle ourselves.
You have to handle it. Any house that was built over 35 years ago is probably going to have a slab leak at some point in the next 5 years. So there's a lot of costs that people don't think about beyond the fact that you're borrowing money. There's an opportunity cost of borrowing and financing, but the upkeep is also very expensive, which is why in a lot of places, 47 out of 50 metropolitan areas as of the end of Q3 2023, it is more expensive. In 47 out of 50, it is nearly double the cost to own that it is to rent in that same metropolitan area.
Yeah. And I always say if you are borrowing money to buy a home, which the vast majority of
Everyone
people
does.
What are you doing? You're renting money.
Exactly.
You don't get that interest back, just like you don't get your rent payment back, but you don't get the interest payment back either. And especially early on in that mortgage, the vast majority of that payment is going towards just simply interest. And so it's a dynamic that is certainly shifting, that it makes it less enticing to buy a home, and until there is a requisite amount of price correction, which will happen. This isn't to say that the prices can't correct. And in some markets, they certainly are. Like talked about the Bay Area, Austin, Texas, Seattle, et cetera. They're correcting. And they will probably continue to correct. But this isn't 08 where you're going to get some sort of
massive correction.
Exactly.
Massive. It's over time.
In that instance, it was a pure crash.
Yeah.
For vast majority of markets, especially on the West Coast, prices were down 50% or more in many, many markets because of those forced sellers. And it happened in 18 months, 24 months. It was very, very fast. This is going to be a longer term correction. It's a big question is how many homes are going to come on market from new home builders. They continue to do well. Also vacation rentals, will they continue to hold on to those homes if less people are traveling and their returns are no longer as great? And maybe they put them on as your traditional long-term rentals. That could be potentially a solution for many of them. Also, they could sell the home. Will BlackRock sell off a bunch of their homes and put those on market? I think that would be a big question. So there's certainly a lot of dynamics that could intensify a pullback in the housing market, but nothing like 08 that's going to create some sort of housing crash. Yeah. So that's why we tell clients, be patient. Don't go out and rush to buy a home that doesn't check all your boxes. That's what it's all about. We talked about at the top of this video, the utility. Utility is number one. And if it checks all those boxes of the utility for your lifestyle, your needs, not just today, but 3 years from now, 5 years from now, 10 years from now, because that may be how long you need to hold this home in order to get through this time period of a price correction that's probably going to take many years. So that's the way to think about the housing market today. A lot of changing dynamics, very different, but this is not 2008.
Well, thanks again for joining us on this iteration of the InvestTalk Classroom, where we covered residential housing. And don't forget to like and subscribe to this channel and join us at the InvestTalk Podcast.